Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Zero DTE Option Strategy. Brought to you by me, the Stock Options Hero. Oh yeah, let's leap into it. All right, so today, before I hit record on the video, sorry, if I see a trade entry, I jump on it. I would rather do it on the video, but I don't want to miss my trade entry. So I put on the May 26th, which is today, thereby making this a zero DTE trade. So I sold 10 contracts of the 42.15, bought 10 of the 42.20. Okay? So going to the chart, SPX will need to close above 42.15 today for me to achieve max loss on this. Right, so right here, as long as SPX closes above 42.15, I'm going to go over to your filled orders. Right, so I collected 95 cents times 10. Before commissions, I will make $950 for a 3-hour-long trade, and I'm risking roughly 4,000, right? So the strike width is 5, so risking 5,000, then you subtract the amount of credit, and then that gives you your actual risk of 4,000 roughly, right? So yeah, risking 4,000 to make 1,000, right? So return on credit is 20% or 25%. 25% return in 3 hours of trading. Yeah, I mean, I could live on $950 a day. I don't know about you. So, going back to SPX, when I entered the trade, I believe it was around here. Right? So, I saw bearish engulfing. Let me zoom in. SPX opened down here around 41.56, ran all the way up here to around 41.99, 4,200. So I'm like, that's a pretty good run. So I found a short strike at around 15, 16, or 17 delta that was above my top linear regression channel. So not only was it above resistance, it was above my top LRC, and it gave me from roughly $11 or so of buffer. So all things being considered, MACD over here was way overbought, and then it was trading even higher, even though MACD was declining. I felt that SPX had very limited upside potential today, barring any significant news announcement. So I went ahead and placed the trade, the 42.15/42.20 bear call spread. Now, if there's a pretty substantial sell-off on SPX today, and say if it comes down here around 41.88, 89, or even at this plus one LRC, 41.75, if there's enough time left, I will try to put on a bull put spread. So whenever possible, I like to leg in to an iron condor, because, as I mentioned in one of my previous videos, it doesn't require any additional buying power reduction. So it's essentially increasing your potential return, but you're also taking on additional risk, right? Only one leg of your iron condor can possibly expire in the money, assuming they're not the same strikes, right? So I could see, like, if SPX trades around 41.90 and I put my bull put around like a 41.75, 41.70, and then SPX sells off big time and closes like at 41.60, then I will lose on my bull put leg, at which point I will take a max loss on that, whereas my bear call leg will stay out of the money and I'll just take that full credit. So hopefully you take more in on your bear call leg than you did on your bull put. So all in all, you're still profitable on the day, but I wanted to let you know that it is a possibility when you're legging into an iron condor. Or if, say, like over here, SPX is, imagine SPX is just kind of trading along the mean here, or this middle line, and then you do an iron condor on your +1 and -1 LRC levels. I mean, that could have worked, and you'll see that SPX yesterday didn't even come close to the +1, -1 LRC, so that would have been a successful trade. But generally speaking, I don't like putting on an iron condor when it's trading at the mean. I much rather leg into it because you get a much better credit that way, and you have more control over your probability of success, right? So hopefully you understand what I'm trying to say. But all right, so let's take a look. I know we're only talking about 0 DTE option strategies, but I also, for those of you that have watched all my videos, I wanted to show you that I am slowly and surely getting out of my 45 DTE trades. So I've got ENTG, which is my biggest loser right now. I'm trying to roll it out to July. So why don't we go in here? So you left click, right click, cancel replace. So it looks like the mid is $1.75 debit. I'm trying to close that out at a 5-cent credit. So I'm just going to leave that. Hopefully we'll get filled in the next little bit. Let's see. So right now I'm short 2 on the 90 call. Oof. Yeah, that's not good. Ouch. So yeah, my short strike's way down here. This is one of the dangerous things about trading around earnings, that if they have really great earnings, I mean, it wasn't phenomenal. That earnings estimate was 52 cents, actual 65. They would have had really strong future guidance, would be my guess. But yeah, looks like we might take max loss on this unless we see a major sell-off. But looking historically at this chart, ENTG has not really touched this top level all year, and that's probably why I felt somewhat comfortable doing the 90s strike. So hopefully it will find a reversal soon. I still have 21 days till expiration. So in 21 days, hopefully we see a major sell-off and it trade below 90. So there's still hope. It just looks a little painful right now, but with the MACD being so overbought, even on a 12-month time frame, look at how high MACD is in comparison to the rest of the trading year. See, for that reason, I'm not overly concerned. I'm somewhat concerned, but I still think there's a fairly good chance that we'll be able to roll it within the next 21 days. And hopefully, even if there's a big enough sell-off and I catch it before it rolls to the next expiration month, maybe it could even expire out of the money. But it would have to lose roughly $17 in value, right? So I'll keep an eye on it, but worst case, it's only $1,000 loss when I'm averaging about $1,000 per day on this new 0 DTE option strategy. Well, it's probably between $650 and $1,000 per day. I don't like taking losses, but it happens. This is part of the trading lifestyle. So fiber, 1750 put. Okay. So pretty big sell-off from $30.83 down to $15. So it lost a little over half of its value. MACD and stochastic oversold. Looks like it hopefully is bottoming out. And our short strike is at 1750. So we've got time. Once again, we've got 21 days till expiration. Oh, you know what? Sorry. I rolled it. So we've got the July 21st. So we've got 56 days. Right? So we've got quite a bit of time for a rally in fiber. So feeling much better that now that I was able to get additional time to be right on this trade. So looks like this one rolled. So I don't want to spend any more time on it. I've gone over managing your option spreads at length in some of my past videos. But yeah, so far I am enjoying the SPX 0 DTE strategy. And I don't know, it's I'm kind of torn which one I like better at this point, the 45 DTE or the 0 DTE option trading strategy. I think once I master 0 DTE option strategy and find a way that I'm not chained to my desk all trading day, I think I might possibly prefer the 0 DTE option strategy. So that's it for today. Please make sure you like, share, subscribe. Tell all of your friends and family members, especially anyone that wants to supplement or replace their full-time income working from home. I honestly believe it is possible with trading option spreads and maybe even 0 DTE option strategies. So subscribe to my channel, watch my videos, so you too can learn how to trade these option strategies. That's it. Thanks again, and happy trading.